And welcome. You're watching the Business Today show. I'm Chaiti Narula. Let's start off with the top news of the day. Stocks take a beating to the red. Benchmark slump over 1%. Broader markets too slide. India's volatility index up nearly 7%. IT, media and metals lead losses on Dalal Street. The government is looking to raise as much as 2,720 crore rupees from a sale of part of its stake in IRCTC. Company stock falls more than 6% in the first day of the OFS. Money to be added to divestment proceeds. Big boost in India's efforts to get Nirav Modi extradited from the UK. British High Court denies him permission to appeal against his extradition order in the UK Supreme Court. Says the arrangements at Mumbai prison enough to prevent his suicide. Border scuffles, intense bilateral relations fail to deter trade ties between India and China. Despite Doklam and other border clashes, trade increases by 29% in the last 5 years. Burdened with thousands of crores of rupees in losses, EdTech giant Byju is looking at trimming its ad and marketing spends. Reports say the company is in talks to exit its sponsorship deal too with the BCCI. Hyundai is the latest to announce a price increase in its cars from January, blames the rising costs, joins Maruti, Tata, Kia, Renault and MG in announcing a price hike. On a steep sell-off on Dalal Street, with indices ending the session deep in the red as the street priced in cues from a hawkish Fed. Let's bring you those numbers on your screen to get you better perspective. Nifty ending below the 18,500 mark, to be precise 18,415, down 1.32% in today's trading session. Sensex tanked nearly 900 basis points, to be precise 879 basis points, to close below the 62,000 mark. IT, metals and media stocks were amongst the top laggards in trade today because the day belonged to the bears. So let's start with the top losers on the Nifty today. On your screens right now, let's bring you Tech Mahindra, Titan, Infosys, Grasim, Eicher Motors, all down over 2% in today's intraday trading session. Meanwhile, we did see mild gains coming in on stocks like Britannia, Hero Motor, NTPC, SBI Life and Sun Pharma. With that, let's shift focus to an important conversation from earlier today. My colleague Sakshi Batra caught up with 361, formerly IIFL Wealth's Anu Jain, to understand the road ahead for the Indian markets. Here's a slice of that conversation.
900 points gone on the Sensex right here. We're seeing 18,400 on the Nifty right now, and it could be breached any second as we speak too. 259 points gone there. Can we see a sharper sell-off in all the global equities, US markets and in Indian markets because of this reaction from the Fed?
Well, I think on the Dow, you can see a 4 to 5% correction, which could be mirrored all over the world. And if we were also to mirror another 5%, that would bring us down to roughly about 17.5. I think it's a very fair correction. A lot of money is sitting on the side, and there's a lot of support around those levels. Anything beyond 5% seems to be, there has to be something coming up more, because the inflation trajectory is on the corrective side. So it isn't that inflation is still going up and, it's a scary thing. We are about 50% of the path, or maybe about 60-65% of the path to corrective modes have been kind of achieved. So I doubt it will be anything sharper than 5 to 6%. And I would basically be a buyer anything below 18,000.
So looking ahead, do you think that these recessionary fears, the economic slowdown, a kind of an environment would be a bigger concern for us at any point? And is that something that we really need to track quite seriously?
So US is a market or economy also where the Fed is pretty quick, and as soon as they see that the slowdown is hurting them, they can reverse and ease the policy very quickly. I think on a personal front, I'm more concerned about the way Europe reacts, and I think that is where the bigger pain points can be. At the same time, we have really not seen how the South American countries as well as the African countries deal with it. And we've usually seen that, problems in currency, problems in managing economic deficits, both on the domestic and the foreign side, is seen there as a problem. So while I think America may kind of, by the end of 23, get its act together, I think you will see probably problems emerge on the places where the balance sheet handling is much more weaker. So I would look out for those pockets, and since we are the exporters to a lot of those countries, I think those companies will have to be careful, because how demand impacts those countries, just like how we are looking right now at IT, that could be a hidden factor which we may have to worry about 6 months later. On the domestic side, we are getting mixed signals. Some sectors are doing very well, some are kind of not so well. But I think on the balance, I don't think India is a concern.
Shares of the Indian Railway Catering and Tourism Corp, IRCTC, slumped more than 6% today, hitting their lowest level since September. The fall coincided with the first day of the share sale in the company. The government is now divesting 5% of its stake in IRCTC, for which the floor price was set at 680 rupees, significantly lower than Wednesday's close of 735 rupees. The first day saw the issue subscribed more than 3 times. The issue closes tomorrow. The US Fed Reserve has gone slow on its earlier rapid pace of interest rate hikes, while also signaling that borrowing costs are now at record levels since 2007. The Federal Reserve Open Market Committee has raised its benchmark rate, but this time around by half a percentage point to 4.25 to 4.5% target range, the highest level in 15 years. Here's a detailed report.
Today, the FOMC raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
The U.S. Federal Reserve has continued its battle against inflation by raising its benchmark interest rate hike to the highest level in 15 years. The FOMC voted to boost the overnight borrowing rate by half a percentage point, taking it to a targeted range of 4.25% and 4.5%. The increase broke a string of 4 straight 75 basis point hikes, the most aggressive policy stance since the 1980s. Fed Chair Jerome Powell said it was imperative to keep up the fight against inflation.
The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
The rate hike comes with the expectation that the global economy is inching towards stagnation in 2023. Officials received a boost with the U.S. inflation print for the month of November. Government data showed that consumer prices rose 7.1% in the year ending November, the lowest rate this year. Data from across the globe shows that inflation has started ebbing. For instance, prices in UK came in below expectations at a 10.7% in November. A cool-off in commodity prices helped ease pressures, even though high food and energy prices squashed households and businesses. A steep decline in inflation was seen in the Eurozone countries as well, from a record 10.6% in October to a 10% in last month. Inflation was seen easing for the first time in 17 months. The fall comes amid signs that global inflationary pressures are moderating, with significant declines in wholesale energy and food costs. Acknowledging the impact of tighter monetary policy, the Fed members have also gone ahead and cut their growth targets for 2023 by more than half to 0.5% from 1.2% previously. As the central bank lays the path for slowing the pace of rate hikes, investors maintain cautious stance around the risk of Fed having to slow down earlier than expected as the economies need to start absorbing the full impact of the rate hikes. From here on, it's a simple game of wait and watch. Bureau Report, Business Today TV.
And here's a little something for stock market fanatics defying all global headwinds, including the monetary tightening in developed nations and pricing volatility. A particular Indonesian stock is bucking the trend. A whopping 1,600% rally this year seen on PT Adaro Minerals, a coal mining and trading major. The Bloomberg World Index includes a little over 2,800 stocks. Power and energy major Adani Power, which is a subsidiary of Indian conglomerate Adani, is amongst the top 5 best performing stocks on this index. Shifting focus now to the laggards, Israeli tech giant Pagaya has witnessed 93% decline, taking up the top loser spot, followed by names like AppLovin and fintech company Affirm. Closing in on the 4th place is crypto exchange Coinbase. Equity mutual funds have witnessed a net inflow of 2,224 crore rupees this November. This is the lowest inflow recorded since April 2021. In October, inflows were about 4 times higher. So what does this really mean? Are investors wary of inflated stock values? Are they expecting a big correction in the stock markets? My colleague Sakshi Batra discussed this trend with NS Venkatesh, who is the chief executive of the Association of Mutual Funds of India. Listen in.
Well, SIP contributions have crossed the 13,300 crore mark. Help us understand what is aiding this strong SIP flow.
The strong SIP flows are a clear feature that essentially people are trusting mutual fund as a good investment vehicle, and essentially if you are looking at it, the retail participation is very, very high. The number of folios of SIP is over 6 crores. The SIP flows will continue to be there for the simple reason that it is a long-term investment vehicle, and we believe that the trend, whatever is indicative, we will touch the 14,000 crore by, let us say, next June.
By June. Okay. Also help me understand what could be the impact of growth slowdown and also recession fears on the markets that we are looking at in the next year, and on the SIP flows. Are there any concerns of redemptions that we should be prepared for?
No, we are not seeing any concerns of redemptions because the SIP flows are generally for a 5-year to 7-year sort of an investment horizon. So whatever the market blips or whatever happens in the interim for 1 year, 2 years, I don't think that will put the SIP investor in taking a decision that he will discontinue the SIP. That is not happening. We are, on the contrary, we are seeing that people are remaining invested and continue to increase their investment through SIP. So that is what we are seeing. So we believe that even if let us say a small dip in the growth, recession is not a possibility in India because India is definitely one of the fastest growing countries globally, but maybe a small dip in the growth could affect the overall economic condition, but still I believe that the SIP flows will continue to grow.
Okay. Also, sir, we've seen the equity mutual funds have actually witnessed an inflow of 2,224 crores in this month. October was around 9,200 crores. Why this sharp drop have we witnessed, and is that a concern going forward as well? Do you expect any further fall or then a bounce from these low levels going forward into the future months?
The equity has come down for the simple reason that the markets have touched all-time highs. So when the market has touched all-time highs, people are trying to encash on their profits and use that money for the consumption because the October, November, December and all is festival season. So people are using that money for consumption or for buying houses or cars, those sort of the thing. So I think that is where you are seeing the dip that has happened in the equity mutual fund inflows. But going ahead with the budget around the corner, so we believe that the budget will be a very good budget which will be proactive for growth. So if that growth is there in the budget, the focus is on growth in the budget, then we believe that essentially the equity markets will also rebound. And once the equity markets rebound, you will see more and more flows coming back into the equity mutual funds.
Time now for a very short commercial break. Later on the show, it's business as usual between India and China, despite the tensions, scuffles at the line of actual control.
The academic pressure for entrance into India's premier engineering and medical institutions has once again claimed students' lives. 3 suicides on the same day has rocked Kota, the city in Rajasthan regarded as India's biggest coaching hub. The victims, Ankush, Pranav and Ujjwal, were all medical entrance aspirants.
उसकी बहन खुशी का फोन आया कि रिया सुसाइड कर लिया है, तो मैं वहाँ से भागते वक्त पहुँचा तो उसके हॉस्टल के नीचे देखा कि काफ़ी पुलिस की गाड़ियाँ लगी हुई थी, एम्बुलेंस लगी हुई थी, तो ऊपर जाके देखा कि वो पंखे से
रिया ने सुसाइड किया है। जिनकी डेड बॉडी पोस्टमार्टम के लिए पोस्टमार्टम उन पर लेकर आए हैं, इसकी कार्रवाई जारी है।
As is widely known, these are not isolated cases. There have been 6 student suicides in the last 30 days in Kota. 20 students have taken their lives this year so far, while both 2021 and 2020 recorded 4 student suicides. Nearly 160 suicides have been reported in the last 11 years.
घर जाते हैं, फैमिली प्रेशर होता है, पढ़ाई नहीं होती है, अच्छा खाना नहीं मिलता है, रहने का है, तो उसमें प्रेशर बहुत होती है, तो बच्चे सुसाइड कर लेते हैं, ऑप्शन ना बचता उनके पास, इसलिए इस कारण बच्चे सुसाइड करते हैं।
और यहाँ तो जो कंपटीशन है, पेरेंट्स एक्सपेक्टेशन है, जो स्कूल से आए हैं वहाँ का टीचर स्टूडेंट्स का एक्सपेक्टेशन है, और बच्चा का भी एक एम होता है, जो एम को लेकर वो यहाँ कोचिंग लेने के लिए आता है।
Kota, the education coaching hub, is also turning into a suicide capital. What needs to change for lives to take precedence over ranks and marks? With Devankur Vadhavan in Jaipur, Bureau Report, India Today.
Welcome back and thank you for staying with us right here on the Business Today show. Even as the mood in China towards India has soured further after the latest clashes, as you already know, that have been reported in Taiwan, there is very little impact of the heightened tensions on the trade relations between the two nations. If anything, the relations have only deepened in the past 2 years since Galwan. Here's a look.
Indian and Chinese armies facing off against each other on the LAC in Arunachal Pradesh. Several injuries reported on both sides, reviving the tension last seen after the Galwan clashes in June 2020. There was outrage across the country. Political mayhem in the parliament, with the opposition clashing with the treasury benches. And amid all this, despite Galwan and Tawang, it's been business as usual for trade between the two neighbors. Not only has the trade between two of the Asia's largest economies continued unfettered, it's risen nearly 30% in the past 5 years. Last financial year, India exported goods worth $422.2 billion. Of this, China's share was more than 5%. This export has risen 59% in 5 years, from $13.3 billion in 2017 and 18 to $21.2 billion in 2021 and 22. India's imports from China registered a growth of 23% in 5 years, from $76.4 billion in financial year 2018 to $94.2 billion in financial year 2022. Of the total amount, the largest portion was of engineering goods, followed by agricultural products, ores, minerals, chemical products, petroleum and crude. And despite India's rising exports to China, its trade deficit with China has widened by 16% in the last 5 years. India's trade deficit reached $73 billion in financial year 2022 from $63 billion in financial year 2018, indicating that the rise in India's imports is outpacing its export growth. Meanwhile, there are some signs of the border tension spilling over to trade as well, with India cracking down on Chinese mobile manufacturers, accusing the global giants of tax evasion and money laundering. Bureau Report, Business Today Television.
EdTech major Byju is reportedly walking back to the pavilion in the innings with the BCCI. The financially stressed company is said to be seeking to exit its jersey sponsorship deal for the Indian cricket team. A final decision is likely on the 21st of this month.
He is the corporate all-rounder, the man batting at the wicket at one of the world's largest EdTech companies, Byju's. For the past 15 years, Byju Ravindran has been captaining the company, scoring a whopping $22 billion valuation on the way. His company's international exposure is helped by the Byju's brand emblazoned on the jerseys of some of the most iconic present-day Indian cricketers. But the funding winter that is set in could mean that it is in the past. Reports say the company has told the BCCI that it wants to withdraw from the sponsorship deal, though it may continue as a sponsor till March 2023. Byju's, which has been wading through a financial morass, is said to be rationalizing its media and advertising spends. The company had raised $250 million from existing investors as recently as October. It is, however, under massive pressure with creditors seeking premature part repayment of a $1.2 billion loan. The creditors claim that the company breached the agreement, including a September deadline for declaring its 2021-22 results. The only results it declared in September were for 2020-21. Much delayed, which stunned the street with a 4,588 crore rupee loss. The results included a 150% jump in advertising and promotional expenses to 2,251 crore rupees. The losses seem to have clean bowled Byju's sponsorship dreams. Byju's had taken over from Oppo as the Indian cricket team jersey sponsor in September 2019. The deal with BCCI was for 18 months and Byju's had to pay 4.61 crore rupees for each bilateral game and 1.56 crore rupees for each ICC fixture. The deal expired in March 2022 and was renewed only in June for about $55 million, with Byju's reportedly agreeing to pay 10% more for each match. The big spending EdTech company is also an official sponsor of International Cricket Council events and also kicked off its global dreams by becoming the official sponsor of the FIFA World Cup 2022. The company is said to have paid $30 to $40 million for the FIFA deal. Bureau Report, Business Today TV.
So what does the exit of Byju's from the BCCI universe mean for India's cricketing world and even for the startups that are being impacted by the economic headwind? Here's Business Today TV's managing editor Siddharth Zarabi in conversation with India Today sports editor Vikrant Gupta and Business Today executive editor Krishna Gopalan.
While the business of the deal is on one side, what does this news tell you in terms of BCCI's own troubles with jersey sponsorship? First, we had a mobile phone company, now an education tech company. If this were to pan out, who do you guess will be the next sponsor of the jersey?
Siddharth, hi. I think it is about Byju's more than cricket or the BCCI, because a similar thing happened with the IPL sponsor also 2 years ago when Oppo pulled out. In fact, they said that They wanted a suspension of 1 year. And the BCCI in the interim went to another sponsor who paid them money. And once Oppo opted out of the IPL, they got more money than the original Oppo deal from Tata's. The TV rights, it was 16,500 crore rupees for the 5-year term for the IPL. And the last year when they renegotiated, it went for 50,000 crore rupees. Which means that even though Byju's will be out, there would be a new player in the market. And for all you know, the BCCI could actually get more from the new sponsor than what they were getting from Byju's. But I think it's about Byju's. People are surprised now as to if the financials of that company weren't good enough. Why did they invest so much in cricket? In cricket, they've been investing for years now. So it is understandable that the mileage they wanted to get, they must have from cricket. But they also signed up Lionel Messi, paid him a hefty amount just recently before the FIFA World Cup. And that was something the investors must have also talked about, because if you go to invest in football, in Messi, and pay him much more than you would have paid the BCCI, and if the company is bleeding, I mean, that doesn't make sense.
That's a very good point, Vikrant. I just want to follow up that point on with your own views on the value of cricket sponsorships in India. You've tracked this for years and you've seen, like you very correctly pointed out, that valuations have kept going up. Does it ever concern you with regard to BCCI's own approach towards sponsorship? For them, is it just the money that matters, or also the brand and what it represents?
When the Oppo thing was happening, obviously it was Oppo who approached the BCCI for a 1-year suspension, and the BCCI let them go because that was also a period when the Indo-Chinese relations were really bad. And if you remember, Siddharth, there was this chorus in India where people said, oh, let us not buy Chinese products. And Oppo, of course, was into the phone market and they thought India was a huge market. But if the sentiment was against China and against Oppo, it made no sense. The BCCI would definitely want money. They would also want a big brand, so as to say, notionally, because that helps. And, again, anybody who can afford the BCCI jersey or the Indian team's jersey would be a big sponsor, would be a big brand. What has been happening recently is when they signed up with Tata's as the IPL sponsor, they stressed on the fact that Tata's was an Indian company, not Oppo. Oppo was a Chinese company and Tata's was an Indian company. So they may actually see amongst the ones who bid for the jersey. I don't think it will be a problem for the BCCI, because in terms of the cricketing money, the jersey money is peanuts now. Like I said, if they get 10,000 crore rupees a year just from the IPL rights and the Indian TV rights, the Indian domestic and the India international cricket rights are also up for grabs, it means that the Indian jersey is not the biggest pie for them. It is just one slice. And as I see, maybe the money will go up. Maybe the ratio will go up.
Absolutely. That's a very good point. Krishna, come in on that, because what Vikrant has done is provided us the cricketing perspective. You have followed the business of cricket and entertainment very closely. What's your sense? Which way would the toss go with a new sponsor for the Indian jersey?
Very clear about this. Getting a new sponsor, to my mind, is almost going to be a walk in the park. I mean, look at the trend. They had handset manufacturers, it's EdTech. So one really has to look for the new unicorn on the block. Vikrant is absolutely right when he speaks of the China sentiment. But if you remove that particular part of the business, you're still spoiled for choice. And for someone to cut a check, let's say for, if I remember right, Oppo paid about, I think, close to 2,000 crores the first time around. And if you look at, it was actually a little over 1,000 crores, I'm sorry. And if you compare that to how much they might have to pay today, it would translate to perhaps about 150 to $200 million at best. But the visibility that comes by virtue of having your name on the jersey in a high-reach business like cricket makes for the most compatible marriage. So I would put my money on one of the unicorns stepping in to replace Byju, because they're flush with funds, and quite honestly, they really don't know what to do with the money.
Well, that's it from me, Chaiti Narula, on this edition of the Business Today Show. Keep watching India Today and don't forget to log on to www.indiatoday.in or go ahead and download our India Today app. Thanks so much for tuning in. Thanks for your time.